Hello and welcome. You're with us here on BTTV. Let's take a look at how markets are doing today. And at this point, we're still trending in the green. So clearly the momentum's picking up after a few days of sluggish trade. Right now, the sensex is at 174 points higher. 61,593 is what we're tracking. Nifty is also trending higher right now, so about 0.2%. Europe opened a little mixed to flat this afternoon, so nothing too exciting to take home from there. KPID Tech right now, one of the stocks that's on the move on the back of news and a strategic deal coming in with Renault. So that's one of the stocks in news. We've got a few stocks on the back of listing news as well that are buzzing, as you can see there on your screen. Let's pull up some of those gainers for you and take a look at what really is driving the index today. We've got names like Apollo Hospital, Bajaj Finance, JSW Steel, some of the contributors. There you have it, 1.5–3% on Apollo Hospitals today. SBI is looking good, HDFC Life Insurance Company, Dr. Reddy's, Hindalco, Sun Pharma, Axis, some of the names that are on the brighter side of things. What's lagging in today's session? Let's also pull up some of those names and take a closer look at perhaps where some of the pressure continues to be. And Adani Enterprises, watching out for that board meet today. Power Grid, Hero Moto, a couple of the names there that are actually lagging behind. Let's go across to Siddharth Sedani, who's joining us on the show today. Siddharth, good to have you with us on BTTV. Let's first get your take on the overarching trend in the market. What really do you feel are the cues that we're going to be looking out for next? Siddharth, can you hear me?
Yes, Aabha. Hi.
Okay, great. What's your take on the market, Siddharth, right now? Are we going to go up, down, or kind of continue to trend sideways till the year end?
Yeah. So what we believe is in the market, the consolidation will keep going for some time more because there is no fresh triggers. Result season is behind us.
Exactly.
On top of it, we see that how the Fed and the Fed will be behaving in the December policy meet. So all these things are right in front of us. So we expect some kind of a consolidation in the market, like what we have been seeing today. Mid caps and small caps were underperformers since a month or so. So we believe the catch-up rally from mid-cap and small-cap can happen in the times to come. So overall, market we are positive, but with a lackluster kind of approach.
Okay, fair enough. In terms of sectorally, Siddharth, what do you feel more inclined towards right now, given the valuations we're now trading at? Are you looking at themes that are going to be riding on India's growth story? Are you looking at safer bets? Which way are you? Which direction are you going towards?
Well, very rightly pointed that we are looking at the backbone of the economy, and this backbone of the economy is banking space. BFSI is one space which we are looking very keenly. Added to that, we are looking at manufacturing because as we see, whatever the goals of the government is today, to reach to 21% of the GDP contribution of manufacturing till 2027. Looking at this aspects, I think manufacturing also looks quite good. Consumption, some of the safer sector bets are good. One of the contra bets, which I believe looks quite interesting from here on, maybe a quarter or so, little more dampener, is technology. Technology is one space one can accumulate now because if we see some kind of a bad results or accidents going forward, that would be only the December quarter. Henceforth, we believe as a contra play, technology also can take a front seat.
Okay, interesting. And within that basket, anything particular that you like?
Yes, on the banking space, as we said, one of the banks, leading banks, State Bank of India, is which we are very positive on. Of course, the justifications are very clear. Looking at the results, the strong numbers, the decade high credit growth of 16%, which is up by 32 basis points, NII growth of close to 13%, whereas profitability growth of 74%. So SBI, looking at the biggest banker of the country, looks quite interesting from the banking space in the PSU segment. Karur Vaishya Bank, KVB is on one small cap, mid cap bank is what we are very positive on with a medium to short term perspective with a target of 115. State Bank, we are looking at 650. On the technology space, one stock which we are very interested in is Coforge, added with persistent systems. Both are mid caps, so emphasis and persistent systems look quite interesting. And from the manufacturing space, of course, capital goods likes of ABB, L&T, these stocks are very interesting to us as of now.
Okay, talking about banks, PNB is definitely on the move today. That one's up about a good 5% in today's session. We've definitely been seeing a lot of traction across those financial stocks. Hindustan Zinc, in the meanwhile, is down 5 to 6%, while JSW Steel and some of the others are still trending higher. From the metals basket, Siddharth, what's your view? Anything there that you would still pick up, or are you staying away from some of these commodity names?
Well, Abha, from the global commodities name metals, we are little away. Although we have a long-term perspective buys on some of the stocks like Tata Steel, but as of now, we are not recommending our clients to enter because global commodities are again
Recording in progress.
exposed to lesser liquidity across the globe. Of course, Fed, the regulatory banks tightening, so on and so forth. So we are a little away from metals as of now.
All right, so staying away from metals, fair enough. Let's also get a perspective coming in from Saurav Mukherjee. He's also somebody we spoke to recently for his take on the markets and a couple of the themes or perhaps picks in the broader markets that he's eyeing. Let's listen in.
I mean, look, I've never quite understood why people spend so much time thinking about the level of the stock market. To the extent you have a country where the economy is growing 6-7% at real terms, corporate earnings are growing 15 to 20%. Naturally, the stock market will oscillate up over. The stock market will grind up over time. The issue is not whether equities will hit fresh highs. They will hit fresh highs repeatedly in your and my lifetime. The question is, can you and I and your viewers, can they make money consistently from investing in the Indian market? The Marcellus proposition has been, yes, you can make money consistently in the Indian market if you invest in companies which are clean, well managed and have dominant franchises. So distinct from whether the market will go up, yes, it will. Distinct from that is the question, can you consistently compound? Our proposition is yes, you can. And that's something which we've written about in our books, whether it be Diamonds in the Dust or Coffee Can Investing.
We see this trend that the startups that we 1 year ago saw get listed on the BSE or the NSE, and now where the lock-ins have ended, the valuations have dropped. What do you have to say about that?
Nothing new here, right? Every decade, the Indian stock market finds a new paradigm to get worked up about, and then the paradigm crumbles in less than a couple of years. We saw this same story play out with power and infrastructure, and the movies replaying this time with tech-enabled stories. If a company doesn't generate cash flow, if a company has never generated cash flow, it's unlikely that it will generate cash flow after you buy, right? So everybody cites companies like Amazon, and on the back of the one spectacular Amazon, a lot of other low quality companies have floated. But there's only so much lipstick you can put on a pig. And I think our stock market has probably done that in a little bit of excess. Yes, there'll be successful tech-enabled companies in our country, but out of every 10 aspirants, one will succeed, the other 9 will destroy your wealth. And therefore, again, I go back to the same proposition. Look for companies cleanly managed, competently run, dominant franchises, and the dominance manifesting itself in superior cash flows coming out of the company. Very few tech-enabled companies have done that, unfortunately.
2020 was a year where Indian markets outperformed its global peers. Do you see this momentum sustaining, or where do you see we're headed now?
So as I just said in the presentation to PMS Bazaar, right, our point of view is that what we are going through is very similar to America in its heyday, 1880 to 1930. We're joining the country up, not just physically joining it up, financially joined up, digitally joined up, tax evasion is being cracked down upon, we are formalizing the economy, cost of capital is coming down. This confluence of factors is very, very powerful. Very few large economies can hit so many buttons at the same time. Given that the rest of the world doesn't seem to have anything remotely comparable, my reckoning is for several years to come now, India will be the world's fastest growing large economy.
All right. So I was just taking a look at some of the gainers, and there's some action across some of these fertilizer names. Fertilizer, agri-commodities. Do you see any interest there? I mean, even if it's not something you're picking up, but, going with the overall domestic economy theme?
Of course, Abha, because fertilizer is one space where government is planning to work out a lot of policies towards it, and That would be a big moat for the entire sector. Having said that, as you rightly pointed out, agri-chemical and agri-commodities, that there we are really eyeing up to a stock called UPL. UPL looks quite interesting. It's a top five agrochemicals company in the world. Has a strong numbers towards it last quarter. In fact, on the profitability side also, it was a beat on 27% growth in the profitability. Margins expanded 1.2% kind of stuff. And management is expecting 12 to 15% revenue growth and 15 to 80%, 18% EBITDA growth. So looking at these numbers and the projections and the guidance, and in fact, let me tell you, guidance has been revised upwards. Looks quite interesting. So UPL is one stock with a target of 940. Looks quite interesting to us with a medium to long term perspective.
All right, that's on UPL at this point. Let's take a look at what else we're seeing some amount of action in today. And then we'll go back across to Siddharth on some of those names. Let's see. Aegis Logistics is trending a little higher. Syngene International, Aditya Birla Cap. Just looking at the broader markets to see, Siddharth, everyone's always looking out for that one idea, right? That's going to suddenly give them manifold returns. And we do have experts who are still predicting a 20-25% upside, despite the fact that we're at these higher levels. Would you say that there are stocks that you find that could give those kind of returns going forward into the new year?
Surely there are many stocks and many companies listed in this space. Any given point of time of the market, although we are very close to a good all-time high, but here also you have a lot of opportunities with yourself. Some of the unique ideas which I would like to highlight here is something like exhibition space slash multiplex space likes of PVR. PVR looks quite interesting to me at this current price with a target of 2200. As you see, 800 plus screens, some screens outside India. Expected strong sales going forward. Some of the banners like Drishyam 2 has been clocking strong numbers, 80 plus crores in 5 days collection. In fact, it may cross 100 crores very soon. Some of the Tamilian movies like Vati is coming up on 2nd of December. That will also bring in traction for their collections. Average ticket price is also improved from around 200 to 239, 240 odd rupees. F&B is one of the strong stays of their revenues. F&B, food and beverages, has improved over a period of 1 year from close to 100 rupees to 140 rupees per user spend. So strong realizations we are expecting, especially from Maharashtra and NCR regions. So PVR is one space in the exhibition arena. Looks quite interesting. Content is coming. We saw initial part of the year there was not strong contents which was hitting the exhibition space, but now I think content is coming up. So with a target of 2200. Added to that, in the automobile space, we like something like TVS Motors, which is again on the frontline side. But TVS Motors looks quite interesting with a target of 1330. One of the leading two-wheeler manufacturers, strong volumes coming up, margin strong, especially on the EV side. They have a very strong order book. The vehicle called iQube is really selling well. 25,000 is in the pipeline orders. Strong growth expected. So TVS Motors kind of OEM space is also, which is again a front line, but still have a capacity to deliver good promising returns for New Year.
Okay, great. Let's go across to Prasoon Talukdar also to take a look at what are some of the other buzzing stocks in today's session.
Hi, speaking on buzzing stocks,
Yeah.
Paytm fell over 5% to hit a fresh 52-week low. Shares of Paytm continued their downward trend for the third trade session today. The stocks plunged 5.26% to hit a fresh one-year low of 452. Over the past month, the stock plunged nearly 28%. Paytm has declined by around 66% on a year-to-date basis. For now, market participants largely remain cautious on the stock as it may further decline after some consolidation. Second, Hindustan Motors shares jumped 10% today. The automaker's announcement to extend its electric vehicles domain, helped the shares gain surge. The stock jumped as much as 9.85% to hit a day high of 18.40 rupees. Earlier, Hindustan Motors and its European partner had completed due diligence for the proposed electric two-vehicle project. Third one is the KPIT tech stock. Shares of KPIT Technologies rose over 5% today after Renault Group said it has selected it as a strategic technological partner for the next gen software defined vehicle SDV program. Renault Group expects the SDV tech programs to drive its value roadmap of vehicle production programs that will start from the year 2026. Next in the line is Inox Green Energy, which got listed at a 7% discount to the issue price. Inox Energy Services today staged a poor market debut. The stock got listed at around 60.50 on BSE index, a 6.92% discount to the issue price of 65. Market participants were a bit cautious about the asking valuations and the company's order book, as most of its contracts were from its parents, Inox Wind. They were, however, optimistic about the company's prospect, considering the consistent track record, strong heritage, and government's initiative to push the renewable sector. And last but not the least, fertilizer stocks jumped. Shares of fertilizers companies were in the focus as they rallied today amid heavy volumes on hopes of a healthy demand. Shares of Rashtriya Chemicals and Fertilizers, National Fertilizers, Gujarat State Fertilizers and Chemicals, Gujarat Narmada Valley Fertilizations and Chemicals, and Zuari Agrochemicals were up between 5% and 12%. A few market watchers believe that the domestic fertilizer industry is well poised for structural growth led by a renewed emphasis towards food security as shortage and the global supply chain recover. That's all from my side for today. Back to you. Thank you.
Thanks for that. Okay, can't resist but ask you, Siddharth, on these tech plays, right? I mean, lots of interesting newsmakers there. We can talk about many of them. But the tech plays are, they're fulfilling this prophecy of suddenly being badgered in the markets. Do you feel it's an interim blip, or are you also fairly negative on them? The
Well,
likes of,
Abha, I don't see
yeah,
much of a Abha,
yeah.
I don't see much of a respite on this further because it is not a level to average, neither an investor to enter as of now because we may see further downside on this because of simple reasons. Valuations are steep. Added to that, the frontline IT players across the globe, including India, has been battered badly because of the poor sentiments across the globe. The new tech companies would be always an expensive proposition for investors. Added to that, there are global sell-offs, profitability issues. Added to that, every company, new tech companies, has its own problems. Some valuations, some are competitors. Some of the new unlisted space companies like Farm Easy or MobiKwik, which were planning to come up with the IPO, they are also delaying their IPOs. They are also in the unlisted space. The companies like Farm Easy prices were around 120, 130 is currently 30, 40. So, looking at the preposition, I would not put my neck out and go and buy all these companies because of specially only one reason. There is no visibility of profitability still in the times to come. So, let's wait it out and let's not catch a falling knife.
Okay, sound advice there. Some of those mid-cap IT players, KPIT Tech, got Mass Tech, couple of the ones that are looking good today. One listing, Inox Green, of course, as we were talking about, nothing too exciting at this point. But are you interested by some of these green energy driven companies, Siddharth?
No, in fact, we are positive on this space, especially on the renewable side, but not all these new listed companies. In fact, we are positive on Tata Power, which is little underperformer since last 2 quarters. But numbers this quarter Q2 was quite interesting and promising. So something like renewable energy, something like working on the electric vehicle space, we are quite positive. Something like Tata Power, which can be picked up at this current levels also with a target of around 280, 300 with a 12-month perspective.
All right, fair enough. So let's take a look at some of the other pockets then. What about discretionary, Siddharth? Auto, and what's your favorite from that basket?
Well, in the auto space, I am positive with the four-wheeler space likes of Tata Power, Tata Motor, and so on and so forth. But we are very, very positive on the two-wheeler space and specifically TVS Motors. They are the third biggest, but looking at the volumes, seems to be the biggest amongst all because volumes are strong of TVS Motors. The numbers are quite interesting. Revenues have a strong jump, YOY 12% of volume jump, especially on the iQube side, that is an electric vehicle which they have launched. They have 25,000 vehicles there in the pipeline to go float in the market. Capex of 750 odd crores in this year. So iQube, the electric vehicle space is what which is buzzing in the TVS motor space. So we are positive with TVS Motors in the automobile space with a target of 1330.
Okay, TVS Motors is the one that looks good to Siddharth there. So Siddharth, if you had to come up with your top 5 names then right now, what would they be? I mean, are they all going to be from financials? Would you give me a mix? What would be your top 5?
Surely, the top 5 as of now, which we believe is one of the exhibition space, that is PVR,
Okay.
which we are very positive with a target of 2200. Second would be, of course, the PSU banking space and the leader of all, SBI, with a target of 650. Some of the smaller pockets in the banking space, like Karur Vaishya Bank, looks quite interesting with a target of 115. The fourth is, as just I finished speaking, is TVS Motors with a target of 1330, and the fifth one charts all the bill is agrochemical, that is UPL, with a target of 940. All the five are different from broadly different spectrums and sectors, but I believe with a 12-month perspective, all these companies looks very, very promising.
All right, Sensex now up over 200 points. It looks like it's clawing back. So any kind of slide that it saw is slowly, really gathering strength again. Do you think, Siddharth, we might have a year-end rally still? I mean, we've always had a December rally. This time, now that we're already at these high levels, do you think there's still scope for one?
Well, all-time high is very close to it's at a kissing distance of all-time high, but I believe if market consolidates at these levels and mid caps and small caps starts performing, I think that would be a new year bash for every one of us. I think mid cap and small cap which has missed the rally since a month or so. I think they
Yeah.
have to play a catch-up game.
Yeah, that's for sure. We are seeing a little less traction when it comes to some of the broader market players. Siddharth Sedani, thanks so much for joining us on the show today.
Thanks.
Okay, let's go through some of the major movers today then. We were talking about some of those fertilizer names. We were talking about some of those mid-cap IT names, of course, that stood out. Inox Green on the back of a weak listing today has been in the news. Hindustan Motors was in the news. So these were a couple of the newsmakers. Leica continued to slip. 197 continued to slip. So some of these are, of course, continuing in that theme. But other than that, financials remain on everyone's radar. So we continue to have a fair amount of bullishness coming in on some of those banking and financial names. Punjab National Bank was one that was really buzzing today. That one was up about 5% odd. Let's also pull up some of the other major gainers on the index. Let's pull up some of those names to give you a sense of the picture overall. And from the banking pack, otherwise, it was like a federal bank that continued to see gains, Canara Bank, some of these from the broader markets also that looked good. There you have some of the Nifty gainers for you on your screen. JSW Steel stood out, even though some of the other commodity or metal names didn't really find that much traction in today's session. JSW has been steadily gaining, though, outside of that. SBI, Bajaj Fin, Dr. Reddy, some of the other names there. IT has been clawing back, so I think the jury is still out a little bit on some of those IT names. FMCG continued to be on everyone's radar. TVS Motor was on Siddharth's radar today as we were discussing with him. He seemed to be quite bullish on that one in particular. Sun also a steady 1% or so higher on a Sun Pharma. Glenmark from that particular basket as well. So a mixed bag and a whole host of names, a smattering across the board that continue to see traction. M&M was up about 0.5% today as well. Let's take a look at some of the losers and see where the lag was coming in from. We did see a handful of stocks that were also sitting out of today's session, a good 200 points towards the end of the day before cooling off slightly. I think we're now down to about 61,457, but markets definitely were looking at sort of recovering some of those losses the last few sessions. But now it looks like we've cooled off just a touch upon closing. Power Grid, Tech Mahindra, Bajaj Finserv, some of the names on the losers end of things, Bharti Airtel, Nestle, Ultratech. So as we've heard, it's a little bit more of consolidation that we're seeing, sideways correction, consolidation, nothing really to worry about. But yes, earnings season's behind us. We're heading towards the year end. Will we or won't we see a Santa rally this year? That's the big question now as we come towards the close of November. Still, of course, a good 10 days to go. But on that note, we're going to leave it there on this edition of BTTV, but we'll be back tomorrow with lots more.